Kevin O'Leary is chair of O'Leary Financial Group. And Kevin, I mean, this is a fast-moving situation, of course, and for a lot of investors, it's been obviously a whiplash situation. But we stand poised to see some kind of stimulus package in the U.S., even as we see ever more draconian moves being taken to close down, right? Social movement, business activity. Just weigh in on the seriousness of the move by Ontario and what investors should be thinking in light of that.
Well, I think this is a must-do. I believe a shutdown, a complete shutdown of the U.S. and Canada will occur. I believe the border will be shut more than it is. All the next 3 months is sort of my estimate of what it's going to take, because we have to really slow the case increase in New York. Is a metric most investors are looking at. That's very dramatic. And it's a pretty good idea what's going to happen in Los Angeles. So that's why this social distancing thing has to work. But for investors, it's always difficult to talk about investment strategy when there's human strife at the same time. But when you look back over the last 3 corrections, and they're all different, of course, the best returns ever achieved are because of these dramatic declines. When you get a 34% reduction in index or spreads blowing out in corporate credits, which is the market I'm working on today, extraordinary opportunities there. And I'm not trying, it's very different, that's what I'm saying, Amanda. It's very hard to talk about this in the light of how it occurred. Yeah. But my job as a fiduciary is to put money to work. And I'm doing that. I'm all over the place today. This is a remarkable day in corporate credits.
Yeah, and I mean, it's very true, right, that to talk about the business side of something when there's a very human side that's still unfolding, but they do kind of intersect, right, Kevin? I mean, if we say America is going to follow the path of China, that's very different than saying it follows the path of Italy. And presumably what you price into the markets will be different. The responses will be different. The draconian measures required will unfold differently. So do you think the market has priced in the worst case scenarios here, or do we still need more information before that can happen?
No, I think we're at almost peak chaos right now. Everybody's assuming the rates in which people will contract this virus will increase, but there's no information. But the way I'm looking at it with my team anyways, and the people I spend from 6 a.m. to midnight on every day trying to figure this out, is which companies will survive this regardless of how long this pandemic goes on for? Will we require aircraft and transportation? So you have the whole infrastructure of the manufacturing of aircraft. The corporate credits there are in chaos, the BBB bonds. If I assume that people will still want to get on a plane, there's lots of opportunity there. Will Disneyland again be a place where children go on a holiday? My thinking is yes. So will J.P. Morgan still exist? I mean, think about all of these companies that are under stress in either their equities or bonds. But again, I say to investors, why look at the equities when you can get returns on credits you haven't seen in 7 years? And they're higher up on the balance sheet. Go for the debt first in some cases.
Having said that, obviously that's a very sophisticated kind of part of the market, so not all investors will avail themselves of that. We should say that with caution right now. And it's a sophisticated part of the market, and the high returns will be, of course, laden with risk. So, you just mentioned a couple of names. I think we can agree J.P. Morgan is likely to survive, but Carnival might not. And it would be hard to say, whether Carnival's credit is a good deal or not. Yes, it's higher up the food chain, but, zero is zero. If you mistime it or misprice it, you're still in trouble. So how are you diversifying your risk, even in credit?
Well, you bring up a good point. Will Carnival survive the way it used to be? Maybe not. But will people want to get on cruises 5 years from now? Probably yes. What I'm looking at is short-term, and you made a statement which I agree with, Amanda. You shouldn't be doing corporate credits yourself. There's many great advisors you can work with, and at this point, people need advisors, particularly in credits. But think about this. A 36-month credit just 14 days ago was yielding significantly under, triple B, investment grade, significantly under 4%. And these spreads have blown out. They haven't been in a decade. And so if I like a company, pick any company, and it has corporate credits, most of them do, most big ones do, why would I buy the equity while it's in chaos going up and down when I can just move a little higher up the balance sheet and buy a return of maybe 8 or 9 or 10, or if I want to go double B, 14, or single B, 20. Like, I mean, it's really getting chaotic. And I think to myself, well, why don't I work in that space? And when this is all over, maybe I'll do better.
So just for some insight here, you know, you yourself are a small businessman. You've run small businesses. If you are operating one in Ontario, you just learned that tomorrow you are shuttered unless you're an essential service. What would your advice be to people who are trying to figure out what to do next, how to figure out, you know, what to do with their employees? There's just a lot of uncertainty and fear right now.
Well, I have over 50 private companies in my portfolio, including in the United States and Canada and Mexico. And I've been doing Zoom calls with up to 10 at a time with them. And here's what we're doing. I'm not endorsing this, Amanda. I'm telling you what we're doing. Number one is we're going back to, these are the ones that are under very heavy stress. For example, restaurateurs or food suppliers or carnival operators on land and that kind of thing. Here's our strategy. And remember, giving you the facts. Mm-hmm. So to survive, we're going back to our employees and saying, look, two choices. Either lay 50% of you off or you all take a 50% haircut in salary for the next 90 days. We're using a 90-day window. Then we're going to our landlords, the ones that are private, and saying, we cannot pay rent for 60 days. We're not saying we're never going to pay you. We need a deferral of that rent. And then many of them are REITs, and this is where it's getting really nasty. We're not going to pay rent. We're just not going to. We're not going to write a check to those REITs. Right. They can sue us if they want, but I think they're going to have a really hard time in those local states doing that. That is what's happening, Amanda. I'm not endorsing it, but that is what's happening. That's how these companies, particularly the ones where I don't have control, where I may have a credit, may have 15% equity or whatever it is, I'm telling the CEOs, this is what you're going to do. We are in a survival mode. This money from the helicopter has not arrived from the Fed yet. It may not come for months. If you want to live next week, you've got to tell everybody what your plan is. I think even the REIT landlords that know this is the right thing to keep the DNA of these businesses intact over the next 3 months. Now, if this lasts longer than 3 months, I don't know what to tell you. Yeah, well, we'll certainly be having a different conversation then. Kevin, we do appreciate your time today. Thank you. Take care. Kevin O'Leary, Financial Group.